Welcome back. Well, let's get this conversation going with Pawan Parakh, Director of Renaissance Investment Managers. Pawan, good morning. Thank you for joining in. Season's greetings to you. So, I'll start with this capital goods space first because we've just been trying to make sense of the Siemens transaction. Details are flashing on your screen as well, I'm sure. How are you positioned on capital goods? And if you can, not commenting on the buy or sell on the stock, but what do you think of a global giant like Siemens and their business in India?
Hi, Surabhi. Greetings to you too and your team as well. Coming to capital space, I think this is one sector we've been very positive about. Coming specific to Siemens, I think this transaction that's flashing on the screen, I think that as far as this transaction is concerned, I think that's a non-event. It's an interstate transfer. Pricing doesn't really matter. From an investor perspective, what matters is two things. One is how's the capex cycle panning out in India, which I think is quite good as of now. And in fact, with whatever development on the power side that's happening over the last 3-6 months, this story has become even more positive and more promising. And the second thing, which is very specific to Siemens, is the historical track record of the business in and out that they keep on having at valuations which are not really comfortable with minority investors. So I think as far as Siemens is concerned, these are the two things. I would be actually worried if the company which is acquiring the stake eventually dumps the stake to investors, because typically MNC companies, which especially in the cap goods space, which own less than 75% stake in the listed entity, don't trade at such high valuations at which Siemens or EVB kind of companies are trading. So I think those are the things to watch out for here. But as far as fundamentals are concerned, I think the entire space is in a very, very, very sweet spot.
By the way, there's more to that news, and that explains why the stock has moved up. There is a demerger happening, so some hope of value unlocking. I think that's what's getting people excited. Siemens is going to be demerging its energy business in India. They've done that globally. The energy business is housed in a separate entity, which is Siemens Energy. And then that global entity, Siemens Energy, will then be housing the Indian energy business as well, the demerged energy business. We need to know if they'll keep it as a separate listed entity or what. I think more details are coming through. But that explains the fresh round of excitement on the stock, Pavithra.
Yeah, I mean, that's what Vivek was mentioning as well, right? That we could see a separate Siemens-listed company as well. And they're looking to complete this demerger by 2025. Pawan, let me come to you on another theme, which today is looking very big, which is this entire metals play, right? We got the China industrial data also, which came through better than expected on that front. Do you think this is a space which will continue to get a lot of the action? And if yes, which way would you play it within the metal space?
Given our style of investing, where we focus more on growth-based investing, we like more of growth-based businesses, secular growth businesses, less of cyclicals. Typically, commodities, what we try to avoid. But given the space, I would want to say one thing that based on what I hear from global economists and some very senior seasoned guys, China economy is not recovering in a hurry, which essentially means I don't think global prices are going up anymore. So in that kind of a scenario, we've been practically zero weight on commodities, and will actually continue to remain so in the current environment.
Pankaj, what are your favorite themes right now? If you have fresh money, where will you put it?
So we've been very positive on tech selectively. Once again, whenever I say tech, I always mention selectively, because you can't paint the entire sector with the same brush. But we're very positive on tech. We discuss industrials. That is a thing which we like a lot. Incrementally, we think, given the data that was released overnight, inflation is moderating globally. India and globally both. If that continues, I would want to believe that FII flows, which are negative for last 3-4 months, will actually turn positive. And typically, FIIs like finance stocks. And you would see that finance stocks have been one of the biggest underperformers, especially the large cap private sector banks. Maybe in next 3 to 6 months, that is a sector, those are the stocks where you can see some action. Apart from that, we are also very positive on consumer discretionary and auto sector. That is where broadly, we place our bets.
Okay, one space which has really been going off is this entire PSU basket. But for someone, say for instance, who hasn't gotten in, do you think right now is still a good investment to make and get in at this point, or do you think there's already been too much of a run up in this basket?
I would want to believe, the major part of the run up is done away with, because most of these stocks, are closer to say 0.8 to 1% ROA, 12 to 15% ROE. From growth perspective, you would see that they're all guiding. Different banks are guiding for different growth rate, but none of them are hardly one or two exceptional, but none of them are aiming to grow at faster than industry level growth rate, which essentially means that all of these companies will actually lose markets here over the next say 2, 3, 4 years. More importantly, all of these PSU banks have a very strong advantage in terms of cost of funds. And if inflation is to moderate from here on, I would want to believe that you would better off playing, some NBFCs or maybe some small finance banks, wherein you would see more benefit in terms of NIMs improving over the next, say, 3, 4 quarters.
Okay, all right, Pawan, we'll leave it on that note. Thank you very much for joining in today. Good chatting with you. Look forward to doing that again soon. We'll take a break right now. On the other side, more market updates.